to carefully balance economic recovery while maintaining stable prices.
With the benchmark rate steady since late 2020, Bangko Sentral Governor Ben Jokno says a rate hike is finally possible by June this year.
And the world's richest man, Elon Musk, buys Twitter for more than $40 billion. We begin our broadcast with another big-time oil price hike.
And despite this fresh round of price increases, the Energy Department says it's unlikely that the Congress will amend the oil deregulation law before President Duterte finishes his term in June. Diesel products are up by 4 pesos and 10 centavos per liter, while gasoline is now more expensive by 3 pesos per liter. Kerosene prices have increased by 3 pesos and 50 centavos per liter. The Energy Department said the ongoing war in Ukraine contributed to the new price adjustments. Year to date, gas prices have already jumped by more than 18 pesos per liter, while the net increase for diesel is above 31 pesos per liter. The Energy Department concedes that it may not be possible for the present Congress to pass the proposed measure that would give the government powers to intervene in the event of a spike in fuel products. The agency says tweaking the oil deregulation law before President Duterte steps down in June may be challenging because of the election season.
Pagdating ho kung whether or not matatapos ho natin ngayon yung amendment in this Congress, magko-convene pa ho sila minsan, no? Pero sa aming estimate, medyo mahirapan na, no? Kasi iba yung priorities, no? Ngayon, election, at pagkatapos ng election, siyempre, canvassing, then they have to go around, of course, and maybe thank their constituencies or maybe even take lighter loads, no?
The International Monetary Fund urges the Philippine government to carefully balance the need to support the economy's recovery while maintaining price stability. Now, IMF Mission Chief for the Philippines, Cheng Hoon Lim, says monetary policy can remain accommodative in the short term, provided that inflation expectations remain well anchored. The BSP has kept policy rates at a record low to boost the economy's recovery, but has signaled adjustments in the second half. Now, last week, the IMF raised its growth projection for the year to 6.5% from the 6.3% forecast in January. However, this is lower than the government's 7 to 9% target.
Now, analysts say consumer goods and food manufacturing businesses will likely be the most affected by a potential price shock in oil and commodities if the Russia-Ukraine war escalates. Union Bank Chief Economist Carlo Asuncion said industries like transport and manufacturing that use petroleum will also bear the brunt of the war's impact. He added that MSMEs, which are dependent on transport to sell their goods, will also be affected by higher fuel prices. Recall that headline inflation jumped to a 6-month high of 4% in March, already matching the upper end of the BSP's 2 to 4% target band. This reflected the surge in global oil prices since Russia's invasion of Ukraine started on February 24. Now, to get more of his insights on today's biggest news on the business front, from oil to consumer prices to an imminent rate hike, we have on the program Carlo Asuncion, Chief Economist of Union Bank. Good morning, Carlo. Thank you for joining us today.
Yes, good morning. Thank you for inviting me.
Okay, again, based from our top stories here, oil prices remain volatile, of course, due to ongoing tensions in Ukraine, as well as the easing of lockdowns in Shanghai. There is now a push again to amend the oil deregulation, but it seems to be a little too late now with Congress working on it, very unlikely. But while it's going to be a little too late here, what would such changes do in controlling prices?
Yeah, well, it's a difficult thing to actually estimate in terms of its impact if you are going to at this point, no, amend it, no, except for that fact that we think a supply side remedies or even at this point because it's a shock, it's something that we're hoping that's not going to drag on or be protracted. Some short-term subsidies would be the answer rather than looking at a huge impact wherein you amend the law and rush it at this point. But of course, we know that it's not going to happen. But if you are going to do it, you have to be careful not to subsidize even the people that don't actually need it, who can afford, but rather just address the immediate ones that are affected largely by this shock.
Okay, at least from your point of view, more targeted subsidies would actually do the work for now. Not, I mean, most industries in the Philippines are still petroleum dependent, but which sectors do you deem will be most affected? And on the flip side, which industries can we expect to win or at least cash in on some opportunities here as tensions in Ukraine continue to escalate?
Yeah, well, of course, we know that a 30% of the lower segment of our population who actually, for example, just buy kerosene on a daily basis or buy rice on a day even on a daily basis. They can't be they can't hedge. They can't buy in bulks. They can't hedge the movement of prices. Once it moves on a daily basis, then that's really challenging for them. And of course, we know the transport sector. They're the ones that are really bearing the brunt. Of course, these are the ones, the part of society that we need to really quickly address and quickly give what they need to be able to cushion the impacts of this. And to your question of who are the winners, well, at this point, it's kind of longer term for me in terms of those who are hedging or who are right now selling less dependent on petroleum products, particularly even vehicles. Well, I know, but this is such it's going to take a long time. But it's all the more. Some of their products are getting to be attractive. Hybrid cars, for example, or certain products that take advantage of the ones that you don't need much of petroleum products to manufacture. So I think it's there, but it's going to take some time. So it pretty much, I think that it's really a negative impact on an overall. If you're going to look at it by sector.
Okay. Well, hopefully renewable energy comes into the fore. But as you mentioned, long-term pa yun. Carlo, please explain to us the demand versus supply side issue on inflation. No? So you did already mention, obviously, the oil prices pushing everything else up. But on the other side, you've got the IMF looking at downgrading the global growth forecast. We're the only one, I think, in Southeast Asia and the Philippines that was actually upgraded. And then you've got concerns on even the demand for oil going down because of China's slowdown and even the U.S. consumerism slowing down. So would this not temper the spike in at least prices, and would this not have a downward effect on inflation moving forward?
Well, if you notice, the first 2 months, even the month where the impact supposedly of the uncertainties, the geopolitical risks we've seen so far, have impacted supposedly at least towards the end of February. But as you can see, it's what we've seen even in our own estimates that it's not big as it's expected. I think that's going to our side because remember that we are just coming out of the pandemic crisis, where demand has been very subdued. And now that just the people are just going out and I would say people still have that giggle to spend and even those people that will travel and go out there in places like like for me personally, like going out to for example Baguio. Of course you have to put gas in your car.
Mahal na.
yeah, medyo mahal na pero kung isipin mo, I want to go there. It's been a long time, So there are certain anecdotal stories that are like that, no? That sort of cushions the impact of people not going or them being restrained from doing what they need to do. But definitely the pressure is there.
Okay.
And it's undeniable. We know that March we have 4%. No, so for April we are expecting, of course, a higher inflation print. So
Okay.
yeah, that's basically
Carlo,
the,
to
the,
that
the, the
end,
yeah.
in terms of the rate hikes, which side are you on, diba? Because markets have been very jittery, watching the Fed, possible 50 bips on May, and saying that might be too high considering that the demand might get even more hurt in the future with the slowdown in growth. And you do have central bank governors saying, okay, we need to take a look at it on June, but at the same time, for as long as we can remain accommodative, we have to. And then you've got the finance secretary saying we basically need to keep in step kasi medyo mahirap na if we're behind the curve. So what are we supposed to do at this point in time?
Yeah, the one critical data that I think that needs to be considered in the coming weeks would be GDP. If GDP is robust and higher than expected, then which we actually expect not to be on the high side because we've seen PMI very still aggressive despite of the Omicron threat seems to be shaking it off. No, the reopening is continuing. People are going to places. People are spending. So we think that it's going to be a really a strong, not very strong, but a strong one. No, first quarter, and I think that the BSP will take note of that, and that they will, of course, input that in their forecast and look at where things are going, especially for the second quarter, because that has been the line of the BSP that if we're going to see a stronger rebound and all those things, so that's where they keep going back to their statement of being data dependent. So, and if these numbers are going to be higher than expected or even stronger than expected, and you would expect that they would have to decide very soon, and start also taking into account the U.S. Fed situation, the hawkish U.S. Fed, and even the China slowdown, a potential slowdown because of its challenges with COVID.
Okay, Carlo, lastly, before we let you go, so much of our growth story will depend on what's going to happen in 2 weeks' time. I mean, we're talking about the elections here. Ang lapit na. You have Secretary Dominguez even telling Bloomberg that we need basically to grow 6% all throughout the next administration. So much is at stake here. Question now is, what uncertainties do the polls bring? And so far, based from what you've heard from the candidates, do at least their statements on their economic agenda spark confidence?
What I've been telling in forums that I've been invited to is that, whoever wins, and if they just don't do anything, everything is just ceteris paribus, as they say in economics, it will grow to 6%.
Okay.
Because that has
Good
been
news.
our if you just don't do anything because there's some reforms, you don't mess things up, it's going to grow 6%. But the thing is that I really believe that the economy can grow so much more,
Okay.
with good governance, with people seeing that their government is really working for them, reforms here and there that's really for them, then that basically attracts a lot more from the outside. And I really believe that if we play our cards right after these elections, we can actually even grow more than 6%, really. And I think that the next administration owes that to the Filipino people that will elect them.
Okay. And also because Secretary Dominguez said kailangan 5 to 6 years of 6% para mabayaran yung COVID debt. So we do need to grow above that. Hopefully, thank you so much for those insights. Carlo Asuncion, Union Bank Chief Economist.
Billionaire Elon Musk has agreed to buy Twitter for $44 billion using one of the biggest leveraged buyout deals in history. With Musk's takeover, the social media platform will now become a private company. More details on this in this Bloomberg report.
Elon Musk has agreed to buy Twitter for $54.20 a share in cash. Once again, Twitter and Elon Musk have agreed to a deal where Elon Musk will buy Twitter for $54.20 a share in cash. Twitter will become a privately held company based on what we're learning right now, and the overall transaction, Taylor, will be valued at about $44 billion.
And I think what is so interesting is you had the poison pill initially enacted. We'd waited for a white knight that never came. And then again, sort of here, huge news now that Twitter indeed will become a privately held company. Across all of this has been Ed Ludlow, of course, joining us now right here from San Francisco. Ed, I am reading through the press release. They're saying that the purchase price is now a 38% premium to Twitter's closing price back on April 1st. That was the last time, of course, that Twitter, the day before Elon Musk really had announced this. So is this, again, sort of fair value as we think about a valuation of Twitter?
Fair value is a huge question. You're right that this is a 38% premium to April 1st, which was the last trading day before Musk disclosed his stake, 9.2% in the company.
Just hang on 1 second, Ed. There are a couple other details that we do need to get to here. Musk has about $25.5 billion in fully committed financing. He is also going to provide about $21 billion equity commitment here. So that's basically the structure of this deal. $25.5 billion through committed financing and a $21 billion in equity commitment that Musk himself is going to provide here. We should also point out that Twitter is saying that it's going to delay its earnings release, obviously pending this announcement here. And a couple other interesting headlines I think we can get to in a second, Ed. But Ed, just talk a little bit quickly here about what Musk's intentions are for this company now that it apparently appears that he may gain control of it.
Yeah, so we're going off past tweets and also his discussion at TED Talks, but it's four main things. An edit button that is time sensitive, he's talked about that. Removing bots from the platform, he's talked about that. Open sourcing the algorithm and looking at the underlying technology for Twitter. And then finally, as you saw that headline from Fox that Trump won't consider a return to the Twitter platform, he's going to look at the issues of bans. Elon Musk basically framed it as being he was more in favor of timeouts than all-out bans on the platform. So those are the four main changes that he's discussed about making at the platform.
Now, coming right up after the break, we'll check how our financial markets are moving after BSP Governor Ben Jokno announces that a rate hike is possible come June.
More of that and other stories when Business World Live returns. Stay with us.
Welcome back. You're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Danny Laurel.
All right, Dan, joke na touting that a rate hike is on the June table. How's that moving developers reliant on loans?
All right, Jess. Well, apart from developers, take a look at how that's moving our bourse. It does seem that we are down by 0.5%. Of course, apart from that, there's a lot of other issues on the table. And like you mentioned, properties seem to be the only one going away from the sea of red here, up by 0.7%, together with industrials, which are up by 0.5%. So let's pull out that property space for you, shall we? One key issue here is not necessarily just the possible raising of rates on June, but you've also got one specifically in focus today, that is SM Prime, that's up by 0.6% this morning. This after they have said that they're seeking to launch more medium-rise residential towers with units priced by no higher than 3.2 million pesos each. Another thing that they're saying is that the REIT might be looking at office spaces instead of malls. That might come later, and they've also set aside 80 billion pesos in capex, of which 20% will be going to their land bank, Jess.
All right, something to watch out for. Thank you very much for that, Dan. That's a first look into the business day this Tuesday, April 26, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess De Los Santos.
And I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.